Yeah, thank you, Susan.
Yes.
Good morning, good afternoon, good evening, who are sitting in different regions. And this is the first webinar we are doing it in the special interest group accounting and auditing. It is my pleasure to start by myself. Going forward, we are planning to have at least quarterly one webinars in different topics, which are all maybe in the area of accounting and auditing. Before I start my presentation, just to give you a brief about myself, I'm a chartered accountant from India. I'm a partner in KGRN firm in Dubai. Am I audible to everyone? Fine. Can be heard, right? Okay, right. Thanks. This IFRS 16, I'm going to give a brief overview about this IFRS. This is it's quite a big standard, but I'll be giving an overview about this IFRS 16. In UAE, especially, we implemented for so many clients from the effective date of 1st January 2019. And in European Union and other parts, it's not being it's not implemented. I guess it will be implemented from 2022 or starting from 2022. I guess we thought it could be a good topic to discuss. And since we have experience here by implementing this IFRS 16 for various our clients, we took up this topic. Let's start background. Before the IFRS 16, the standard was IAS 17. That was leases. That standard called IAS 17 leases. This IFRS 16 replaced IAS 17, and this IFRS 16 is applicable with effect from 1st January 2019. These leases, when you are talking about leases, there are two parties involved, of course, obviously. One is the lessees, other one is lessors. The lessor part of the standard, it's almost similar, 99% similar to what it was in IAS 17. There was not much difference between IAS 17 lessor accounting with respect to IFRS 16 lessor accounting. There is hardly no, especially only the additional disclosures requirements are there in IFRS 16. But as far as accounting is concerned, IAS 17 and IFRS 16 remains same. Most of the things are remain same. Only few additional disclosures required as far as IFRS 16 is concerned. And what's the background? Why this IFRS 16 coming in? Earlier, in the case of lessees, the lot of companies, or even including the listed companies, all those things, they were not capturing the leases in the books of account. It will be out of the books. Say, for example, if a company is having a aircraft as a lease assets, they will be recording a revenue out of these leases. They will be making every year the lease payment for this aircraft usage, but the asset will not be captured in the books of account. And because the contract could be for so many years, whenever they are paying for that year's expenditure will be captured in the books as an expenditure. There will not be any asset as a lease asset, as well as the liability for the future period, which will not be captured in the books of account. Of course, that could be reported as a out of the books of account. Maybe it will be disclosed as a commitments, operational commitments in the audited FS or in the books of account. It will not be part of the books. Then IFRS 16 comes up. Here, the entities are required to capture the leased assets in the books as well as the liabilities for the leased period, as well as the liabilities for the leased period. Maybe if the lease period is for more than 1 year, you have to capture your future liability as well in the books of account. How we have to do this accounting as far as lessee books of account? That's what we are going to discuss in this thing. I'll be touch upon, if time permits, we can discuss about lessor accounting at the end. Maybe 5-10 minutes we can discuss about that. But most of our topic and discussions are going to be the IFRS 16 lessee accounting. accounting in the books of lessees. That's what we are going to discuss. So major definitions you need to understand about these things. So one is, what is lease contract? A lease. What is a lease? The three things the lease will include. One, there should be a contract for right to use an asset. A contract to right to use an asset. That's one part. For a specific period, that's second part. And third part is there should be a consideration for the usage of the asset. The three things should be there in a contract. That will be a lease. A right to use an asset, consideration, and a time period. These three should be there in a contract. That will be called as a lease. And what's the lease term? When you are considering the lease term, as per the standard as well, even in the general terms as well, you should consider the lease period which the lessee has an option to extend or option to terminate. That also should be included at the time of considering the lease period. These are the main two things you should understand when you are reading the standards. One is that what you will call it as a lease. A lease is a contract which should have the lessee should have a right to use an asset and against a consideration, and the period of lease should be defined in the contract. You're considering a term, it should be a optional period which can be extended, or the lessee will be having an option to terminate a contract if as per lessee's wish. That also can be taken. If a contract can be terminated after 3 years, if the lessee wishes, he can extend for another 3 years. That time we have to see what's the intention of the lessee, whether lessee is willing to extend at the time of implementing this in this standard. If he is wishing to, when you are doing that, calculating the lease term. What's the scope of this? There could be lots of leases, but the standard specifically excludes 5 leases. These are why they are excluding these 5 leases, because these leases are being addressed by other standards. For example, first one, the leases to that's what spelling mistake is there. It's not exercise. It is like extract or the extract of minerals. Those leases will not be covered under the standard. And leases of biological assets. By the way, that will be covered under the leases of extraction of minerals. That will be covered under IFRS 6. And leases of biological assets, which will be covered under IAS 41. And service concession arrangement. This is this one maybe if governments are giving contracts to operate some big projects, kind of a road project or something like that, there should be some separate arrangements between the public and private sectors for the running and operation of those projects. Those things will be covered under IFRS 12, service concession arrangements. And intellectual properties, the license of intellectual properties, which will be covered under the IFRS 15, and the licensing arrangements, like kind of covered under these standards. Especially the 5 things is not covered under leases, which will be covered under respective standards, not under these IFRS 16. Then how will you recognize the leases? How you can recognize the leases? There are 2 things into it. In the as per the old standard, which is IAS 17, wherein you will be recording only the expenditure for a particular period. If you are paying a rent or rent for a property or anything, then the rent for that particular period will be recorded as a expenditure in the books of account. Wherein IFRS 16 says, no, you should see a contract. If the contract has a lease for usage of a right to use of an asset, and it is for a specific period, if it is for 3 years, you capture that 3 years value of that payments into the initial period itself as an asset, and corresponding liability you have to book it. How will you take that liability? First and foremost, what do you need to see? The payments. Suppose if a contract is being entered between two parties for a lease period of 3 years. A simple example you can take it, 3 years of an asset. Every year, lease payment of currency unit, say for example, 100,000 is paid. 100,000 at the beginning of the year is paid for the lease. Then year 1 or year 0, you will be paying 100,000, and year 1, year 2 for 3 years lease period. This payment should be discounted. This payment should be discounted for the current value. Then that should be taken as the asset value. Maybe, of course, there should be some other additional expenditure, whatever that can be included in the right of use asset. But initially, the discounting rate should be used to discount the lease payments over a period of the lease, and that should be captured as a asset and liability. And if the example which I told, 300,000 for the lease, every year 100,000 is paid for a period of 3 years, maybe the discounting rate used should be an incremental borrowing rate. Incremental borrowing rate should be taken as a discount rate. What is incremental borrowing rate? Which is nothing but, if you are borrowing for the same kind of similar asset, similar economic environment, for a similar period, what were the financial institution or the same market, you will get a interest rate that you can use, that rate you can use as a discounting rate. The discount rate should be used to arrive at the present value of the lease payments over a period of the lease. Then present value should be taken as the lease liability at the beginning of the usage of that asset. If suppose the example which I told, 300,000 each year is being paid as a lease payment over a period of 3 years, that should be, say for example, discount rate is used as 5%. And just giving an example, it's not exact figure will not come if you're discounting it. Suppose if you're discounting the 3 years the lease payment into a current period, it's coming to 250,000, say for example. 300 over a period, which if you are discounting at some subsequent rate, you may get a present value of, say for example, 250,000. Then the 250,000 should be recorded as the right of use asset debit. If you are making an accounting entry, right of use asset as debit and credit lease liability at the beginning of the lease period. Right of use asset debit 250,000, that discounted present value. Then lease liability should be recorded at 250,000 as the lease liability. I'm just giving a brief about what will happen. Then the lease, the right of use asset should be depreciated or amortized over a period of the lease period, which is 3 years. In this case, then 250,000 divided by 3, you have to amortize over a period of 3 years. The right of use asset. And lease liability, every year you have to accrue that interest. Whatever the discount rate you used, you have to make an expense account of interest account debit to lease liability. Every year you have to keep that, you got to accrue the interest. And at the end of the lease period, whenever the lease payment is paid, 100,000, you have to debit to the lease liability. Debit lease liability to bank. Then at the end of the lease period, the lease liability will become 0 and right of use will become 0. This is how the accounting things works. And the lease liability, how will you calculate the lease liability at the beginning of the period? You have to discount the lease payments at a particular discount rate and take at the initially record the lease liability. And as I discussed, right of use asset, the amount of the lease liability recognized plus any initial cost incurred for entering the lease contract that can be added to the lease right of use asset. And at the end of the lease period, maybe you have to spend some dismantling cost for that asset that you can add it to the right of use asset. Then what is right of use asset at the beginning of the period, which is going to be the discounted or present value of the lease payments plus the additional cost incurred to get that lease and estimated cost of the dismantling of those assets at the end of the period. These together will form the right of use asset value. The lease liability we discussed, that should be recognized. Then this is the initial, whatever we discussed, it is for the initial recognition of right of use asset and lease liability. What we are discussing is that we are discussing the accounting in the books of lessees. Accounting in the books of lessees. Accounting in the books of lessees, initially you have to measure the right of use asset, you have to recognize, and lease liability you have to recognize. This is the first two steps. You have to recognize the right of use asset and lease liability in the books of the lessees. That right of use, the lease liability should be recognized based on your lease payments over a period of time, discounted at a incremental borrowing rate. Okay, if you have any questions on this, we can move ahead to the subsequent. What will be the subsequent measurement? What up to now we have discussed the initial measurement. We will discuss now onwards what could be the subsequent measurements of lease liability and right of use. We will discuss on that. Susan, any questions until now? No.
No questions yet. No. Anyone has a question? Just unmute if you have questions.
We can move on to next one.
Okay.
Okay, right. Yeah, subsequent measurements. What is subsequent measurements? Subsequent measurements, it is, see, initially you are recognizing asset and liability. Then every year, beginning of the year or end of the year, what could be the, how you have to measure and record it in the financial statements, your right of use asset and lease liability. Both the things, how you will measure at the subsequent time. This is one case of subsequent measurement. Sometimes what will happen, even the lessee might amend the contract subsequently. After the initial measurement, the lessee might amend the contract, modify the modification of the leases could happen. That also will come under the subsequent measurement. How will you do that measurements? First, we will see how the in the case of modification, we'll see discuss later. If there is no modifications, how will you measure the subsequent measurement in each end at the end of each year for the presentation in the financial statements? How will you measure? First one, if it is right of use asset, there are three models to it. Right of use asset, there could be three models. Say for example, a company has taken a land as a lease from a lessor, and the company has constructed a building on it. What the example is like, the company has taken a land on lease for a period of 20 years. Land is taken on lease, and they constructed a building over it. Okay, their building will be in the books as their own asset because they have constructed, they have spent the money, they have constructed, it's their asset. But the land, they have taken it on lease. Then the land, whatever they have taken it on lease, should be captured as a right of use asset. If the building is recorded in property, plant and equipment, if they're using that building for their own office purposes, that will be recorded as property, plant and equipment. The building will be recorded as a property, plant and equipment. The land also should be recorded together with that property, plant and equipment. This will be the land which is taken on lease. Whatever the lease value, the future lease payment should be discounted at the present value. That should be recorded in the with the asset value. The building and leased land should be recorded. This will be amortized. The leased land, whatever the value arrived at, will be amortized over a period of that lease period. And the same treatment, whatever set in the IAS 16, which is property, plant and equipment, depreciation of that building is over a period of 20 years. The same way, the leased land, the right of use of that land also should be amortized over a period of 20 years. The same rule applies to the right of use as well. It's a cost model, IFRS 16. You have to amortize the right of use over a period of the lease term. Same like the IAS 16. Then revaluation model. Suppose if you are revaluing that asset building in subsequently in one period, when you are revaluing, the revaluation reserve will go to the equity statement, equity, not to the P&L account. The revaluation will go to the equity as per IFRS 16. The revaluation reserve will go to the equity. The same way, the land also should be revaluation. The gain should go to the equity method. equity, sorry, the revaluation method, revaluation reserve should go to the equity statement, not to the P&L account, profit and loss account. It's a other comprehensive income. It should go to the equity statement. And suppose if the building is used as an investment property, the client or the company is having that property, the building, for earning rental income or for capital appreciation, then that will be termed as a IAS 40 investment property, right? This property is not for their own use. It's kept for the capital appreciation or for rental income, earning rental income. In that case, the property should be kept as a investment property. Under investment property, there are two models to it. One is cost model, other one is fair value model. If the company is using the fair value model, then the right of use asset of the land also should be, you have to arrive at fair value of that right of use asset every year end. At the end of every year, the land also should be fair valued. The leased land also should be fair valued. Then accounted as, if there is a fair value gain, that should go to the profit and loss account credit. And if it is a loss, it should be impaired. Impairment loss should go to the profit and loss account. The same treatment of investment property should be applied here as well. This is for the subsequent measurement of the right of use asset. Subsequent measurement of right of use asset depends upon the asset, whatever the asset is, the usage of the asset based on which the right of use asset should be categorized. The subsequent measure should be done. In the case of lease liability, it should be like IFRS, whatever the discounted value of the lease payments, that should be taken as the lease liability. And every year the interest should be accrued, added to the interest should be accrued and added to the lease liability, and lease payment should be reduced. It will be like this: the opening lease liability plus interest for the period, that should be accrued. Interest for the period should be accrued. Then suppose if the original liability is, say for the example which we discussed is 250,000. Say for example 250,000 is the original lease liability plus interest for that period. Say for example it is 10,000. That should be added with that. Then 260,000 minus lease payment, which is 100,000. That should be reduced. Then it will become 160,000 for the that will be closing lease liability. Interest should be added and lease liability should be reduced to arrive at the lease liability subsequent period. Okay, now we will talk about the lease modification. If there is no lease modification, this is the treatment. If any questions, please let me know. I can take it up. Otherwise, I will move it to the lease modification. I think there is no question. Okay, let me move to lease modification. The lease modification could be for two reasons. One could be the extending the term, or it could be for the extending the asset base. Maybe they would have taken one plot of land, they may ask for another plot of land as well. It is for the extending the lease asset, or it could be reducing the lease asset. The modification could be for three reasons. One is for the increasing the lease value, otherwise reducing the lease value, or extending the lease term. If there is only extending the lease term, it can be the future lease payment should be discounted and arrive at the lease liability and adjust the lease right of use asset. That's it, simple. There is no much things to do. You have to arrive at the lease liability at the time of modification, adjust the amount in the right of use asset. There is no P&L account impact of the extension of the lease period. If there is a new asset acquired or the increase of the lease value, in this case, then if that can be considered as a separate lease, then that can be taken as considered as a separate lease and accounted accordingly. If it cannot be separated from the original lease, then amend the lease as if it is a one lease and adjust the lease liabilities against the right of use asset. You will be having a right of use asset in increased value, and the lease liabilities also. The right of use asset will be amortized over the remaining life of the assets, remaining life of the period with the extent increased value of the asset. This already we discussed, and we'll come to the disclosure part. There are other things we need to discuss, especially the sale and lease back. How will you account it? Sale and lease back and sublease, those kind of things that I will discuss later, because once we finish this, the basic part of the standard, then we will see specific to that the sale and lease back transaction, how we need to take it up. The disclosures. Disclosures, right of use asset should be presented as a separate line item in the balance sheet, in the statement of financial position as a separate balance sheet, or it can be included with the underlying asset. The example which we discussed earlier, we were discussing about the building. It can be disclosed in the property, plant and equipment as property, plant and equipment, building, and one more line item as a right of use asset relevant to the that building. That can be disclosed, or a separate line as a right of use asset. That also fine. This can be disclosed as a lease liability also should be disclosed as a separate line item in the balance sheet. It should be a separate line item. Lease liability, separate line item, can be disclosed as a separate line item. And in the P&L account, two things we need to disclose. Only how much is the amortization of the right of use asset or depreciation of the right of use asset. And second one is interest cost, finance cost. How much is the finance cost relevant to the finance, the lease liability? That should be disclosed. In the earlier method, in IAS 17, your expenditure in the P&L account will be the lease payments made during that period, or lease expenditure for that particular period will be expensed off as a expense item. In IFRS 16, there won't be any lease expenditure, whereas there will be a two line item. One will be the amortization of the right of use asset. Second one is the finance cost relating to the lease liability. These two will be there in the finances, in the profit and loss account as an expenditure. In the earlier IAS 17, one lease expense will be there. Now it will not be a one single line item as a lease expense. It will be like amortization and finance cost. Two line item will be there in the statement of profit and loss and comprehensive income. And cash flow. How will you disclose the cash flow? In the earlier one, you will be disclosing as a expenditure. It will be form part of the net profit. Then there won't be any cash flow adjustments. But wherein in IFRS 16, the lease payment should be disclosed as a finance activity. Finance activity, lease payments in lessee books. Lessee books, the finance activities. You all know the cash flow will have three activities: operating, financing, and investing. Right? These lease payments will be disclosed as a financing activities. You have to disclose the lease payments. Lease payments as a financing activities. Payment of leases, something like that. You have to keep that as the lease payments. Interest can be added with the operating activities, and it can be together. You can keep separately as a principal payments, or together with the interest also you can make it a lease payments. Both presentations are possible. This is some overall the things. And one more thing I just wanted to add on this, the overall view of these leases is that there are two exemptions to the implementation of IFRS 16 or recognition of the right of use asset and lease liability in the books of accounts. Two things are exempted, except one is like low value assets. If the asset value is less than $5,000, that's the value they have given it in the standard as an indicative value. If the asset value is less than $5,000, you need not recognize the right of use asset. Rather, you can continue to do the old method of expensing of that lease payments. No, expense can be booked. Need not book the lease liability and right of use asset if the asset is underlying asset is a low value items, or if the lease terms is less than 12 months. Short term leases, say for example, leases for 3 months, 4 months, 5 months. Less than 12 months leases can be, that expenditure can be expensed off in the same period. Then you need not recognize right of use asset and lease liability in this case. In these two cases, in the case of low value assets And in the case of short-term leases, you need not recognize right of use asset and lease liability in the books of account. You can continue to expense of those lease payments as expenditure for that particular period. Okay, with this, we have done with this overall view of the IFRS 16. Now, the specific items like sale and lease back will continue next. Sale and lease back. Till now, if any questions, please raise and we can address it now. Right, we will move to sale and lease back transactions. I think I can continue. Yes. Sale and lease back transactions. Generally, these transactions are entered by the companies and corporations to use their finance arrangements. If they need some fund, but whereas they are having assets, they wanted to use those assets for their operations. But at the same time, they wanted to generate some funds out of it. What they may have, they may make an arrangement with the lenders or the finance institution, saying that I will sell this asset and take the same asset as a lease. Okay, sell this asset to the finance institution, take that as those assets as a leased assets, just to have a financing arrangements. There could be a transfer of assets in the name of finance institution, or this could be just a contract for financing arrangement. There could be two situations. That's why I've taken it under two. One is if the lease transaction is happening as if it is a sale. The company is doing a sale and take that asset as a lease, then what would be the treatment? It's just a financing arrangement, just a pure financing arrangement. There is no transfer of asset, or there is no the sale happen. Just that's the contract itself says is a pure financing arrangement. Then what could be the treatment in the lessee books? We are all discussing completely lessee books, not lessor books. Lessee books we are discussing, completely lessee books we are discussing. Okay, if it is a transfer of assets in the name of the buyer, in that case, what you need to do there, you have to record the right of use asset for the value of the assets given to the proportionate value of assets given to the buyer. Say for example, the three things you need to consider. One is like, what is the sale value agreed? What is the sale value agreed? The sale value is nothing but the financing agreement. There will be the company or the seller will be receiving the money. What is the sale value agreed with the buyer? And the second one is, what is the fair value of that asset at the time of sale or at the time of entering the sale and leaseback transaction? Okay, the sale value and fair value, that could be different. Fair value could be, say for example, fair value is 100,000. The sale value could be maybe 200,000, or it could be 50,000 also. It could be more or less than the fair value. It's between purely the arrangement with the financing institution or the buyer. Then you need to know the two things. One is, what is the fair value of the asset transferred, and the sale value. What is the sale financing arrangement agreed? How much the value the seller will get on transferring that assets? These two value. And third one, carrying value of the asset. What is the carrying value of that asset in the books of account of the lessee? Originally the asset will be carried in the books of account. It will have some value in the books of account. That's carrying value. Then I discussed about three things. One is like fair value, one is like sale value, other one is the carrying value. Three things you should know when you are accounting for these sale and leaseback transactions. Initially, you should know three things. Then you will be arriving at a gain on sale of the transactions, gain on loss of the transactions, and how much should be in the right of use should be booked. The asset will be reduced. If there is a sale, then asset will be sold, which means the property, plant and equipment asset will be reduced from the books of account. The carrying value will be removed from the books of account, and the right of use asset will be captured in the books. If it is a sale transaction is happening, if there is no sale is happening, then this should be treated as if it's a financial liability, as if you are the company, that the company or the corporation is taking a loan from that financial institution, just a financial liability, which will be treated, which will be accounted as per IFRS 9. There is this standard is not at all applicable because it's a purely financing arrangement. This IFRS 16 will not apply at all. Whereas if there is a purely the transfer of asset is there is a transfer of asset and the company is taking back the same asset on lease, then this should be accounted as per the IFRS 16. You have to reduce the carrying value of the asset from the books of account. You have to bring in the future lease payments, discounted, and take it as a right of use asset. There could be gain on loss on the sale of asset, that should be recorded. Accordingly, this should be accounted. Okay, this is in the books of lessee. And disclosure in the books of lessee. Main disclosure is that the qualitative informations with regards to what are the activities the company is carrying on these assets, that should be disclosed, and different the list of assets taken on the lease should be disclosed. What are the period of the lease? What is the option of the lessee to extend the lease or terminate the lease? And whether this the company is having any low value assets or the short term leases, those should be disclosed. These are all the informations should be disclosed in the financial statements. As per IAS 17, not that much disclosures are there because it's a purely expenditure will go in the financial statements. But whereas in the IFRS 16, you will be having an amortization of the right of asset, the interest element will be there, discount rate used will be there, and the how much of the lease commitments, now the lease period. If there is any variable lease payments, there could be, they may say that yearly we will pay 100,000. In addition to that, we will pay, depends upon the usage of that, we will pay additional amount. That could be variable lease payment. That need not be capitalized in that the right of use. That variable lease payment should be expensed off in that year itself. Okay, with this, that part is over. What could be the transition provision in the books of lessee? I'm going to discuss on that. Till now, any questions we can address it. Otherwise, we'll move to the what is the how the first time adoption of IFRS 16. What are the how we need to do that? Okay, we will carry on. See, IFRS 16 says two method of accounting at the first period. If the IFRS is applied from 1st January 2019, then what could be the things? There could be a lot of leases which may the company may have before the implementation of this IFRS 16 itself. That the leases could be continued. In that case, what could be the different methods you can account it in the during the transition period from the previous IAS 17 to IFRS 16? What could be the different methods of treating those contracts, those leases? The one is full retrospective method, which means the all active leases you have to list down, and you should do it from the starting of those leases. You should record that right of use asset and arrive at, you give your previous 3 financial statements compared to information, restate the previous 2-3 years, and accordingly present the financial statements. That's one way of, that's called complete full retrospective, restating the prior year reporting period with respect with in line with IAS 8. You can restate the previous years retrospectively in the previous reporting period. That's one way. Second one is like you can do the cumulative impact on the retained earnings. You will be arriving at the right of use asset and lease liability. Difference between the right of use asset and the lease liability on the day of implementation, the difference should be accounted in the retained earnings. with this is the cumulative impact, adjustment against the retained earnings. The two methods are there. This is during the transition period. With this, we are completing the lessee books of account. Now we will move to lessor books. Lessor books accounting. Since we have time, we can continue with that. If you are having any questions, we can address it. Definitely, if there is a questions, we can wait for 5 minutes for any questions on up to for the in the leasee books.
Hey,
If
this
not-
is Steve Austin in San Diego.
Yes.
Can you hear me?
Yeah.
Okay? So I appreciate the presentation, but don't you think it's about 4 years too late?
Yes, this is too late. Of course, it's too late. But since we wanted to start immediately, we thought, okay. And not only that, I heard that in European Union, it's going to be implemented from the compulsory implementation from 2022 January. That's another reason I took it up this topic. Yes.
So under IFRS, do you distinguish between the effective date for public listed companies versus non-public companies?
No, IFRS, it's for the all the entities, it is from 1st January 2019. And public listed companies, they have to do the transition period should be from the retrospective, full retrospective. They have to do it for the previous year. They have to restate those lease assets. They have to capture the right of use asset and the lease liability in the previous period. Accordingly, they have to present it. But in the case of other entities, they can use this simplified method, which is they can adjust that impact in the retained earnings and the first year of adoption.
In the U.S. under 842, we had a deferral because of COVID for the non-public companies. Did you have that under IFRS?
Yes, we have. There was a amendment was issued in June 2020 for this COVID-19 impact. That's for a specific period. There was a concession given. What was the treatment of if a company is getting a concession on the lease payments, then how to treat those lease payments, whether to be those lease payments to be taken as an income or to be adjusted against the right of use. Those things were discussed in that paper. This, since it is that period is over, I'm not discussing that. Maybe we can discuss separately. Yes, it was given in the IFRS. Yes, separately it was issued.
Are you aware that the firm in Ukraine has and Julia, you may want to comment on this, but they have a pretty sophisticated software that will help under IFRS in terms of implementation?
There are a lot of firms come up with the IFRS 16 implementation, including a few firms in India came here, given a software. If you are feeding those information, it will give you the right of use value and the lease liabilities, and the every year the subsequent measurement also that will give you the figures, all those things. There are a lot of things, but especially with our client nature, I don't know how many of the companies can afford to those softwares. But if it is a 1 or 2 leases, small leases, I don't think it can be done in the Excel itself. Most of our clients, we generally help them in putting it in Excel itself, some formulas. Then we are giving them the solution. Right. We'll move to lessor accounting, lessor books.
Sure.
Yeah. As I discussed, the lessor accounting was almost same in IFRS 16 as compared to the if you are comparing with the previous standard, which is IAS 17, almost same. You can say 99.99% same. Only with in IFRS 16, it requires extensive disclosures in the books in the case of lessors. Otherwise, the treatment of the other accounting treatment is similar to what it was discussed in IAS 17. IAS 17 also discussing about the finance leases and operating leases in the case of lessors. But in IFRS 16, in the case of lessees, no such finance lease, operating lease segregation is there. It is all the leases you have to capture it if the lease is for a period of more than 12 months, or if the asset value is higher. It's not defined any asset value, but the indicative value given was around $5,000. Those are the low value assets. But anyway, low value assets, except the low value assets and short-term leases, there is no other classification of leases. But in the case of lessors, IFRS 16 also says about finance lease and operating lease. Then maybe the same treatment also continues. That's the reason I thought of not discussing about these lessors. But anyway, since we have time, we can discuss about the lessor accounting. The difference between the finance lease and operating lease, it is operating definition is very simple, which is the leases which are not finance leases or operating leases. Then we should know what is the finance leases. Mostly the economic benefits of that assets will be mostly with the lessees, and the ownership of the risk and rewards of that asset will be transferred. Majority of them will be transferred to the lessees. In that case, that will be considered as a finance lease. Whenever I'll just give you a small example of the car leases. If a car is taken on lease for a period of 5 years, and the substantially the car life is around 5 years, then if the car is given on the lease to the lessees, then lessor can consider that as a finance lease, because the substantial benefit is with the economic benefit is transferred to the lessees. Therefore, it will be like finance lease. The entire accounting treatment in the books of lessors is depending upon whether the lease is a finance lease or operating lease. If it is finance lease, what could be the treatment? If it is operating lease, what could be the treatment? First, we will discuss about the finance leases. The operating lease is very simple. We will discuss about the finance leases. You see, the IFRS 16 gives some indicators. In these are the circumstances, the lease could be finance lease. There are, which we discussed. One was major part of the economic life of that asset is transferred to the lessees. One was that, and if you discount and arrive at the present value of lease payments, and if it is equal to the fair value of the asset, then that could be one of the indicator to consider that lease as a finance lease. And sometimes a specific asset or for the specific usage of the lessee, that case it can be considered as a finance lease. And these are the few indicators is given in the standard. First, we will discuss about the finance lease treatment in the books of lessor. Finance leases, generally in the lessor books, the asset will be derecognized. Originally, the lessor will be buying an asset. It will be in the books of the lessor as an asset. If a lease contract is entered with the lessee, the asset will be derecognized, removed from the books of lessor. Then what will become? The asset, if an asset is removed from the books, then how will you treat that asset? Once the asset is removed, how will you take that into the books of account, in the books of lessor as a it will take another form as a finance lease receivable. Say for example, the example which we discussed about the car. Car value is $100,000. It is given on lease to the lessee for a period of 5 years. and every year 100,000 should be, I mean, 20,000 should be paid, 20,000 currency unit should be paid to the lessor, and the cost of that asset, the lessor would have bought that asset, right? That asset value is, say for example, around 75,000, and they are transferring that asset or giving it on lease for a value of 100,000. The 100,000 should be paid in equal installment of 120 in 5 years term. In this example, the finance lease amount is 100,000, whereas the cost of that asset is 75,000. If it is not on finance lease, that asset would have been sold, or fair value of the asset could be 80,000. They would have the lessor would have sold that asset. If it is not on finance lease, that was sold that asset for 80,000, which means the 20,000 is finance element to it. Since the lessee is paying that amount of the car, the value of the car over a period of 5 years, the lessor would have made some finance element, finance cost to that value. As I said, the car was bought for 75,000 in the normal transaction. If it is not on a lease payment, if it is on cash basis, then asset that car could have been sold for 80,000, because there is a lease agreement between the lessee and lessor. The car is sold for, or the car is given on lease for a amount of 100,000. That lease payment will be paid over a period of 5 years, every year 20,000. Then the entry will be like finance lease receivable, 100,000 to asset, the value is 75,000. Then profit on sale of that asset, which is 5,000, and 20,000 is a deferred interest income. That finance cost will be taken to a deferred income, which is not an income, should be treated as a liability. And one portion, that 20,000 of finance income, will be recorded in the books of lessor over a period of 5 years. The profit on the transfer of the asset, which is that 80,000, the normal selling price, the asset value is 75,000. The 5,000 profit will be recorded immediately, because that is already, that the company has already realized it. That can be taken in the initial period as a profit. But the finance income, which is the 80,000, and the difference between the 100,000 and the 80,000, 20,000 should be taken as a finance income, which should be recorded in the books, not at the first year. It should be recorded over a period of 5 years. That should be split. That should be the effective interest rate method. You can use it, and you can record that in the 5 years period in specific method. This, so the presentation will be like in the finance statements, finance lease receivable less future interest income. At every year end, you have to record that future interest income as a reduction from the finance lease receivable. This is in the case of finance lease. If it is operating lease, it is simple. Whenever the lease income is received, that will be received during the period as a straight line over the straight line basis over a lease period. Say for example, if a car is given on lease for a month, for 5 months period, the lease is 50,000. Then take 10,000 every month. That's it. Over a period of the lease term, the straight line method, you can record that the lease income, which is like operating lease income. It will go directly to the income of the company. Okay, until now, any question? Then we'll move to the next one, which is like the sale and leaseback transaction in the case of lessor books.
Any questions, anyone?
Some chat is there? Some question in chat?
Nothing in the chat.
Okay. Right.
Then continue.
Okay. Continue. Yes, continue. How many participants are there now? Any idea?
There are now 23. There were 27. It's
Okay.
going up and down.
Okay, that's fine. Okay. Right. Yeah, we will move to the next one, sale and leaseback transaction in the how will you treat this in the books of lessor? If it is sale, if the transaction is happening as if there is a sale happening, and the in the case now, since we are doing the discussing the treatment in the books of lessor, the lessor is the one who will be buying that asset. Then the purchase of asset should be recorded in the books. Purchase of asset should be recorded in the books of lessor, and if it is not a transfer, the lessor would have given the financing to the lessee. That should be treated as per the IFRS 9. There is no the financial asset will be recorded in the books of lessor. It is like a loan given to lessee, financial asset, and the interest or the finance income will be the income of the lessor. Of course, it cannot, that time it cannot be called as a lessor. It is, since the asset is not transferred to the lessor, only the financial asset equal to the amount given as a financing will be recorded in the books of lessor. In the case of asset transfer, then purchase of account asset should be recorded in the books of lessor. This is with respect to sale and lease pattern. It's very, very simple. There is no complication. But once the asset is recorded, then the lease payments, all those things should be same as what we discussed. If it is asset is recorded, we need to see whether that is a finance lease or operating lease. If there is a transfer of asset, and the asset should be recorded in the books of account, and the lease should be recorded, first you should see whether the lease is a finance lease or operating lease. If it is a finance lease treatment. If it is an operating lease treatment should be given in the books of lessor. Disclosure, again, in the books of lessor, the qualitative as well as the quantitative disclosure should be given. When is the lease payment maturing, and what's the impact of the asset leasing, residual value disclosures, how the lessor is managing the risk of retaining the or giving the right of assets, what's the net investment, how much is the discounted lease payments, what's the discount rate is, that all those things can be disclosed. The disclosed list quite exhaustive. You should disclose the nature of lessor's activities, how the lessor manages risk associated with the retaining that right of asset, how that risk is managed, and the maturity analysis of lease payments, the lease, the discount rate used. These are the minimum disclosures we have to do that. And when it comes to maturity analysis, you have to present the lease mature within 1 year and 1 to 5 years and more than 5 years. Those things you can give the disclosures. And lessor, one more important point, which is like you people would have heard about the. Okay, up to here, any questions, or can I moving to the next topic, kind of sublease? In the case of sublease, how will you treat it? That's treatment we are going to discuss. Up to now, if any questions, we can discuss. Otherwise, I'll move to the next one. Sublease. Okay. The original lessor will be called head lessor. For the purpose of discussion, I'm terming it as a head lessor. Head lessor. And the intermediate one, intermediate lessee or intermediate lessor. Any term I may use it, intermediate lessor. And the lessee will be again subleasing some portion or entire asset. I can see X is the lessor, I am the lessee. I will give that asset which I got it from X to Y, another one. He will be a sublessee. I am a lessee, he will be a sublessee. Or I can say that I am a intermediate lessor. The X is the head lessor. Head lessor, intermediate lessor, or lessee, sublessee. Three parties involved in the case of the sublease arrangements. I'll be taking a lease. The lease I'll be giving to another person. I'll be acting as a lessor as well as lessee. I am a lessee for a head lessor. I am a lessor for a sublessee. I'll be having two roles. One is a lessor role, one is a lessee role. How will you treat these things? There is no specifically not given any treatment as such, but if the lease can be, if I'm recording as a lessor, if I'm taking a lessor position, which is when I'm giving a lease to a sublessee, I am taking a position of lessor. In that case, I can record that as a finance lease or operating lease. I can treat like that. Yeah, when I'm receiving the lease from a head lessor, that time I can record that as a right of use asset. If I am doing only part of that asset, if I'm doing a sublease of part of an asset, some disturbance in the line. It's okay. Now it's fine.
It's okay. Yeah, I muted him.
Okay. If it is a if I'm giving a sublease, then I'll be assuming a position of intermediate lessor as well as a lessee, since I have taken a lease from a lessor. The subleasing which I'm doing, I could do the entire asset as a sublease or part. Both are possible. If I'm doing a part, then the part of the asset I can use that as a when I'm record, I can record as a lessor the entire lease as a right of use asset, and when I'm doing a sublease, I can treat that as an operating lease in the books of lessor, because I'll be assuming two positions. The one thing what you need to know, whenever the sublease concept is there, when you are doing a recording of the lessor books, completely lessor books, subleasee books, completely lessee books, that treatment can be there. In the case of intermediate guy, I have to do both accounting. One, as a lessor, I have to do the lessor books. That time I need to see whether I am assuming a finance lease or operating lease. Accordingly, I have to record for as a lessor. And if the lease I have taken, when I'm acting as a lessee, I have to decide whether I am booking a right of use asset for the whole asset or for a part of the asset, which I'm giving to which I'm giving a sublease. This I can decide accordingly. The main thing is that you have to disclose the fact in the financial statements. How much I have taken on lease, the asset, and how much I have given it on sublease. Those facts should be disclosed. How I have treated that as asset, that should be disclosed in the financial statements in detail. And I can summarize these things quickly, what are all we discussed, entire thing. Then if any questions, we can take it up. What are all we discussed? We discussed the IFRS 16. We introduced, we discussed scope. What are the leases not coming and not covered under IFRS 16? We discussed about 5 type of leases are not covered under the IFRS 16, and we discussed the accounting treatment in the books of lessor, the accounting treatment in the books of lessee. In the case of lessor books of accounting, there is hardly no difference between the IFRS 16 treatment and previous standard, which was IAS 17. Hardly no difference. Most of the things are kept as it is. In the books of lessor, the leases should be bifurcated between finance lease and operating leases. Accordingly, you have to treat those leases. If it is finance lease and you have to take that as a finance lease receivable, there will be a financing income will be there. That should be recorded in the books over the period of the lease in the books of lessor. And if it is operating lease, that can be taken directly to the P&L account as their income. And in the books of lessee, you have to account for the right of use asset. The right of use asset, how will you calculate? The lease liability plus the additional cost incurred to get that leases, you have to add it. Then lease liability, how will you calculate the lease liabilities? You have to discount the lease payments over the period of the lease and take the present value of the lease liability. That should be recorded as the lease liability. This is for the initial measurement. Then subsequently, whenever at the year end or whenever the lease modifications are happening, you should measure it separately. When the lease modifications are, if it is for the increase of the value of the leases or extension of the leases, then the lease should not have an impact on the profit and loss account. And even if the term of the lease is increased, there will not be any impact on the P&L account. The right of use asset and the lease liability should be adjusted accordingly. And in the case of the reduction of the lease values or lease terms, there could be impact in the P&L account, that you can record it as if the lease modification income or expenditure, you can take it. And the subsequent measurements of the right of use assets are depending upon the right of use assets, the asset disclosure. One, it could be based on IAS 16 property, plant and equipment treatment cost model, or it could be revaluation model IAS 16, or it could be IAS 40 investment properties model. Investment properties, as we discussed, it could be either cost model or fair value model. If it is fair value model, the fair value gain or losses should be recorded in the P&L account. And in the case of cost model, it will be same like IAS 16. And sale and leaseback transaction we discussed. Sale and leaseback transactions, again, in the books of lessor, in the books of lessees. In the books of lessees, if the transfer happened, if the sale is happening, then the treatment should be like as if that you have to record the sale as if the IFRS 15 you should record in the books of lessor. And if it is not, it should be purely based on IFRS 9. You have to take that. It will not cover under IFRS 16. It will be covered under IFRS. If it is not a sale, it should be recorded as per IFRS 9. And at last, we discussed about the subleases. In subleases, 3 persons will be involved at least minimum. One is the head lessor and intermediate lessor and sublessee. Intermediate lessor will have 2 roles. One is like lessor, other one is like lessee books. Then accordingly, that treatment should be made. In the books of head lessor and in the books of sublessee, it's purely lessee books of accounting and lessor books of accounting. In the case of intermediary lessor or lessee, it will be like treatment. Both will be applicable. Lessor books will be applicable. Treatment of lessor books will be applicable. Treatment of lessee books both will be applicable in the case of intermediate lessor. I think I have briefed the things. If any questions, I am most welcome to take it. If not, we can wind up in. We can have a general discussion about any other standard or anything which you people wanted to discuss later webinars. You can give us suggestions. Accordingly, we can take it up. Let us have your feedback and what are the different standards and topics you wish to have webinars in future. Please let us have your views, participants can give, and accordingly we will see later what can be arranged.
Sure. Thank you, Vijay. Okay. I mean, I have all the list here. If you could just put on your video. we could make a picture for,
I have already my videos there.
yeah.
Others, all others can.
All the people.
Yeah, correct. Yeah.
Vijay, can you stop the share, please, so we can all appear on the screen?
Sure. Thanks.
Thank you, Vijay.
We already appear. Okay, a few more maybe.
Yeah.
So that we have a few faces here. Yes. Nice. Hello, everyone.
Come on, Wayne, are you there?
Ah, we
I can see you, Tunde.
I'm not sure.
Yeah.
I'm not sure how was the presentation because I have done it earlier, but at the not at the webinars. Face to face, I have done the presentation so many times. There'll be a board, all those things I can write. I can explain it more in detail. Since I don't have the arrangement of writing on the boards, all those things, I'm not sure how far it is useful. But anyway,
Vijay, I think you've convinced us all that you know your subject very well.
Okay.
So if any of us have got any queries, I'm sure we can pass them to you. And certainly, if there are practical problems, as you said to Steve earlier, in Europe, for instance, we're only just beginning to grapple with IFRS 16. And so it's all quite new to us. So, and I don't know about the rest of you, but no, it's very interesting. So thank you very much for that. So if everyone is there, can smile, Susie will take a picture and we'll put it on our LinkedIn. And if anyone says, what were you doing? Then there's some evidence. You have an alibi.
Right. Okay,
Thank you.
great.
And I'd just like to follow up on what Vijay said. If there are any subjects, accounting and audit subjects that you think we could prepare a webinar, please do let us know, okay? Okay, thank you, everybody. Have a great weekend.
Bye.
Thank you.
Bye bye.
Thank you, Vijay.
Thanks.
Excellent.
Thanks.
Bye.
Bye.
Cheers.
Thank you. Bye bye.
Bye.
Thanks for joining.
Thanks.
Thank you, Juan. Thank you.
Okay. Bye. Gracias, Susan.
Thank you, Susan.
Okay. Great. Yeah, well, I'm afraid, Vijay, that your group of leaders,
Yeah, not there.
the group of leaders has not joined. I mean, we have Steve still.
Yeah.
But that would just be the two of you. That's not really enough to discuss further topics.
Yeah.
Or I don't know.
No, what we can do? No, what we can do? We can have another day. You fix up a time, then we can quickly discuss. I have a few things to make it again. I'm planning to do a update on technical matters. What are the things coming in last 1 year? Kind of a technical updates we can give, maybe half an hour, something like that, including the ISQM. One is going to be implemented across, should be implemented by all the audit firms by 16th December. We can talk about that as well.
I mean, I don't know. Because in the email we said 5:30 or whatever the timing is in your country. That would be another 10, 12, 13 minutes. I mean, we could just wait and see if maybe Bill or I don't know, Gopu.
I don't think Gobu will be able to. Gobu is not here.
No,
actually.
not Gopu maybe, but maybe Chad.
Shad, today here we have a long weekend. It's a festive season, Eid holidays. Today onwards,
Okay.
I think. Yeah, I don't think Chad will be. He was telling me that he's
Okay.
having some family events or something like that.
Mhm.
So when we put this one, that time the leave was not announced. The holidays were not announced. It was announced couple of days before. That's what people would have planned. Even including Gobu has gone on vacation with family.
Oh, okay. Well, yeah, here too, it's vacation time. I'm on vacation right now, but
Oh,
it looks like I'm never on vacation.
but your mail
I'm
I
on
saw your-
vacation and I was working all day.
Yesterday I saw your mail, but you were saying about Thursday instead of Friday, I guess. Your mail to, you mentioned about Thursday, right?
Yeah,
The mail.
yeah, right, yeah.
Yeah, but it's okay, no problem.
Yeah,
Maybe
I was traveling and I will be again traveling tomorrow, but then
think
then I will stay on one place and I'm always looking at my,
okay. I think you can stop recording. Recording is stopped already.
yes, of course. Mhm.
Okay.